Hey guys, thanks for joining today. Nate Dodson, Crowdfunding Lawyers. Really appreciate you being here today. You know, we're just diving into different asset classes, different areas with other people that are just really making a difference in their industry. And today we're talking to, the guy of RV Parks, Pat O'Brien. Thanks for being here today. Really appreciate it.
Yeah, thank you so much for having me. It's very exciting.
Definitely. Well, just to keep things rolling, we'll talk about what you're really doing, but why are people listening to you? Could you share a little bit about your background?
Sure, yeah. So I've spent my entire career in commercial real estate. I'm out of Chicago. We just got a new pope, no big deal. So I'm out of Chicago.
The white puff went up?
Yes, absolutely, absolutely. So it's a big day, and certainly for all us Sox fans out there, it's an even bigger day because he's also a Sox fan. So that's great. It's huge news for us. But so I spent my entire career in commercial real estate, primarily in development. So multifamily, office, hospitality, senior living, retail, and my background is on the numbers side. So putting the capital stack together, financial analysis. I own a handful of apartments, short-term rentals, some retail, a handful of other things. And so I'm the math guy, right? So fast forward to a couple of years ago, I get connected with Patrick and Michelle Bisson, who are RV experts in every capacity. So they've owned and managed RV parks, and they were busting at the seams, and they needed some help on the math. And I said, okay, well, this is how the underwriting works, and this is what this looks like. And they shared with me their global long-term plan. And I had some fundraising experience. So I've done 3 $50 million funds from raise.
That's it?
Yeah. From raise
no big
to
deal.
exit. So I did.
That's huge. With those 3, kind of what was the focus? Were they different or all the same?
Yeah. So they were all value add, but one was multifamily, one was hospitality, and one was retail. Now I'm super dating myself on the retail side. And this is when retail was kind of falling by the wayside, but Best Buy was restructuring. And if you go into a Best Buy today and you have like the Samsung with the appliances, or you have Apple or Microsoft, those are all subleases within Best Buy. It didn't used to be that way. So when everybody was drowning in big box, Best Buy had kind of pivoted and done that. We were a part of that. So that was my retail side.
Okay, I got a question. Yeah. Maybe you know this answer or not. Now you go into Best Buy and it's like they have empty shelves, and it's almost one of those, my God, I hope they make it.
Yeah.
But if what you're saying is right, maybe they're just actually landlords and it's not their problem, it's Samsung's problem.
Exactly. And then their revenue generation is those subleases. And because of that fallout, 08, Lehman Brothers, what have you, in retail and Amazon and the birth of all that, they were able to restructure with those landlords killer long-term leases and blackout clauses and all these different things. But that's where their money is they're the corn shell effectively. But that was my first fund. And then multifamily and then hospitality, which were both restructuring value add in tertiary markets. So I had some fun background experience, the commercial real estate, and then the capital stack side.
Now you are all in on the RV parks.
Oh yeah, all in.
No new asset class. You know, we've been doing RV parks, the mobile home park deals for a long time. I know it's been a great place to be. I would love to hear your thoughts on the differences of an RV park versus the other hospitality and multifamily. Let's leave out retail because nobody's doing that anymore. Like, why has RV park made sense? And how have you, Mr. O'Brien, brought investors to that pot of gold at the end of the rainbow?
It is so different than the other asset classes in the standpoint of an inflation hedge and recession resistant. So multifamily, people are always going to need somewhere to live, but there are very different Class A, Class B, Class C multifamily. And those different owners have different returns they need to hit, different acquisition costs, what have you. That break even is much higher. Hospitality, right? They are extremely elastic, but they have floors and they have ceilings. So if I have the Waldorf Astoria on Michigan Avenue in downtown Chicago, I have a floor. I can only charge so little. So like some guy like Pat O'Brien can't get in, right? They can't charge $100 a night type of thing. So they're extremely elastic in that way. RVs, when times are great, you can charge a premium. When times are down, you can drop your prices and people can still come, right? I can't do my international trip. I can't get on a plane. I can't do whatever, but I can get the wife and the dog and the kids and grandkids, and we can get an RV and go see this amazing country of ours. So
I'll be honest, during COVID, actually our hardwood floors in our house got flooded, all completely ruined. We got actually our home insurance paid for us to have an RV. And so we did an RV park tour of all of the Rocky Mountains. All the way up into the Dakotas. Yeah. And it was amazing, especially at that point. And I know it's been kind of a growing area over the years. They were packed. It was tough to find a spot.
Yeah, absolutely.
So with that experience, like it really, not just like I knew it was good, that I had done some deals, all of a sudden it became like, wow. This is way more popular than I would have ever even thought of. And better still, it's like you get almost apartment multifamily rents, but you have like a pad of cement. That is so brilliant.
Yeah, absolutely. It's so right. Cement, water, electricity. Now that's the RV park, right? What our strategy is the RV resort. So also offering amenities and golf carts and pools and water slides and food and beverage. There's all these other things for that holistic experience, right? But yes, I mean, COVID showed its true colors for the RV asset class, right? I can't do this, I can't do that. People want to do it. It's unbelievable. And there's so much to see within the US. So
man, it is phenomenal. And I got to tell you, one of the huge reasons why I reached out to you, and I know you're also doing a fund and taking in investors, was simply the fact that you are in, I like to talk about sexy asset classes, and it's weird to talk about an RV park
sure.
resort as a sexy asset class, but
yeah.
In all truthfulness, it's kind of, at least in the humblest of opinions, is really the place to be right now. And I have a feeling it's going to be that way for a while.
So I would agree. And I think my biggest takeaway on that was we went to the Campground Owner Expo in Branson last year. And I come from a very institutional, very corporate, right? All those other asset classes. I come from that world. And that event blew my mind. The way people are so passionate, owners, sellers, brokers, vendors in the RV space, there is nothing like it. It doesn't exist in multifamily. It doesn't exist in office. And the other thing I learned from that event was this is kind of the last of the Mohicans for the not yet institutionalized space. And that is part of our strategy as well, right? So there are now getting to be those serious players that understand that there is gold to be had in RVs. And we are at the front of that. I think the next 10 years, you're going to see more and more institutional players getting into the space. It's operations and systems and all that type of stuff. They're just now kind of starting to figure it out because to date, husband and wife, the husband fixes a toilet and the wife keeps the books. And they've owned this resort, they've owned this park for the past 35 years and they're ready.
Oh, I thought you were talking about my house. So sorry, I got lost there for a second.
So there's that opportunity. There's that opportunity, and we're very bullish on it for sure.
I absolutely love it. So I'm just going to throw this out because I know people love to pay attention for a little bit of time, but not the whole time. But if you like what our leprechaun here Mr. O'Brien is talking about. You can definitely check out more at rvresortinvestment.com. We'll share more of their contact information and everything else towards the end. Just, I know that, hey, y'all can jump now, but jump to that website, rvresortinvestments.com. Investments, not investments. My mistake. But still, let's keep rolling. I apologize for
No,
that
you're good. Yeah,
interruption.
Yeah, so it's very exciting, and I think we are at the forefront of that. So part of our plan, right, is the value add play. So very quickly, very easily, getting a website, updating pricing, a coat of paint. There are a lot of things that you can do right away for that value add. And we just closed on the largest RV resort in the state of Alaska yesterday.
Which is the biggest state in America, and I got to imagine it's just huge.
It's absolutely spectacular. The mountain backdrop, the water running through it. It's a beautiful park, and Patrick and Michelle are there now and sent me photos, and it's spectacular. But yeah, so we're moving at breakneck speed. We've acquired 8 parks in about 10 months.
Wow. Okay, that truly is breakneck speed.
Yeah.
Actually, that leads me to a more difficult question, and I am going to ask you, but how fast is too fast? Because that is amazing, and
Sure.
It's wonderful to hear that you've got places for capital to go. Because let's be honest, it's tough to find deals for the syndicators and the deal makers of the world. Like, it's just tough to find stuff, and you've been able to find 8 deals that made a ton of sense, plus get them closed.
Yeah, so now because we are picking up a little steam, and a lot of that has to do with Michelle and her presence online, and we're now, right, RV resorts, let's call Bisson Peak Ventures. So because of that, we get first look at a lot of deals. Now, at any given time, I'm underwriting a dozen deals a week, right? So combing through a lot of that is that challenge. But to your comment, as far as organic growth and sustainable growth, we are building out our team, right? It's about getting the right people on the bus, director of operations, other staff, so we can continue to move at this clip without slipping through the cracks. So our team, we're hiring people left and right, fund managers, operations, HR, even accounting, legal. So we're building out that infrastructure to be able to continue on this pace.
Well, if you're looking for legal, I may got a guy.
Yeah.
So yeah.
I need about a half a dozen references, and we got to check on that.
Oh man, I got a half a dozen references just in my office. I got you covered.
Perfect.
Which, you know what? Let me throw out the syndication investments, deal making attorneys. Hey, if you want to find out more about crowdfunding lawyers, definitely follow this channel. Just always doing a ton of kind of deep dive on education, as well as interviewing guys that are in these sexy asset classes like mobile homes. But if you want to know more information about like how to do a deal, go check out the crowdfundinglawyers.net/thank you CFL. It's literally just like, hey, I'm thinking about doing a deal. Well, here's some structures, here's some information, here's regulations and things to know. Just good info, but go check it out. So what's that unsolicited?
To compound on that service that you provide is absolutely critical. Certainly. So we get a lot of investors, I'd love to invest with you because I want to learn more and I want to do this on my own. And I always tell them, you need to talk to your attorney first, right? This isn't buying a house. This isn't buying a doghouse. There's a lot of moving pieces, and there's food and beverage, and there's real estate, and there's structuring and operating agreements, and you're in different states. So it's critical to have the right people on the bus, and that first person on the bus is your attorney, for sure.
Man, you are I couldn't agree with you more. But, I do want to bring up, I'm actually going to ask you a question. I don't know the answer to this. Are you joint venturing with other guys that are looking for those sexy asset classes, or not. You're just maybe doing some fund of funds, and hey, if you want to contribute, fantastic.
Yeah. So at a very technical level, we're doing, because it is a fund, right? We're a 506c. So that JV discussion gets a little murky. And part of what we invest with us, become a limited partner. We'll give you our roadmap and we'll help show you, and then you go off and do your thing. We are doing some TICs as well. So 1031s, right? A tenant in common. On that way, we're doing a little bit of a JV, that's structuring. So just as a sidebar, right? You have a 1031, you're selling yours. We come together at a technical level, right? I believe, correct me if I'm wrong, that's a JV, that's a TIC, tenancy in common. And then after 12 months and a day, that equity gets to be converted into shares into our fund. So in that capacity, we are doing some JV work.
So what you're actually describing is called an UPREIT, not to get technical on the legal side, but it is a strategy that anybody that's doing kind of these joint ventures or, hey, let's do a deal together. Oh, you already have one, should know about, because you have the opportunity to contribute your ownership in real estate into a fund, get shares out of that fund. And from a tax perspective, it's not a capital gain, because what the thought is what you're providing is the same value as what you're getting. And so they call that an UPREIT. It's just a totally sidebar, different, but really good strategy for a lot of syndicators and fund managers to know about. Yeah,
we've had great success with that. So, yep.
Absolutely love it. So you've talked about you are doing a fund. And so want to give you the floor to do your little song and dance pitch of why it is the greatest thing since sliced bread.
Yeah.
But I'm going to go ahead and bring this up. It's the Bisson Peak Fund 1.
Yep. Yeah.
Am I saying it right? Because I know Bisson is.
Yep. Bisson Peak Fund 1. Exactly right. Yep. So it is a $35 million fund. We've raised about $12 million to date with a $50 million cap. And Bisson Peak Ventures is the general partner, and we're opening it up to our limited partners. So the structure of our fund, there is an 8% pref that comes right off the top that's guaranteed on a quarterly basis to our limited partners. And then we get into quarterly distributions. It's a 5-year fund. And our historicals are high teens, low 20s cash on cash. So you're an LP, you invest with us, you get your 8% pref off the top, and then we get our quarterly distributions. In the 5th year, depending on economic headwinds, where we're at as a country, whatever, we can sell. My goal is obviously to bundle this up and sell it to private equity or a REIT, but maybe times aren't that great. We do a cash out refinance, we do a 1031, we close the fund, we roll it into Bisson Peak Fund 2. We have all these exit options, but in that 5th year, all the while you've collected your pref and your distributions, that's 100% of your principal is returned on the 61st month. And then we go from there.
And I love the concept. I love that you're thinking about it as a portfolio play. I know actually very specifically in the RV park resort asset class, taking more of a portfolio approach actually makes the entire fund, the entire portfolio, actually that much more valuable. Private equity wants to buy 5, 10 parks. They don't want to go through all the work for just one. They don't want to take on the risk because there's different management, and you have grandpa who's been running it for the last 40 years and keeping his books on Excel.
Right.
Versus the more professional approach to it. So commendation on what y'all are doing, and especially very specifically in the RV resort world, it does actually make it more valuable as the portfolio grows. So absolutely. That's awesome to hear.
Yeah. That's the exact strategy, right? And everything is so nuanced, especially in this space, right? The RV resort in Lake of the Ozarks is not like the one in Alaska, and it's not like the one in Florida. So everyone has their special, unique qualities, but all singing from the same sheet of music. One system, one marketing, one legal, one accounting. And that's where all that value add and that heavy lifting comes in, for sure.
There are so many people out there that have been doing multifamily deals for the last decade. And it's admittedly a tougher world to get deals done in.
Mm-hmm, for
between the interest rates, between the cost of insurance, taxes, and whatnot. There are a lot of people that are just thinking about what a pivot looks like. And I never encourage anyone to just pivot with your first deal and good luck, have fun. There is always an educational process to it. Whether you're joining a mastermind or a group that shares and teaches this, and I can tell you it just doesn't exist in the RV resort world. No, you've got the more passionate people that participate and may own because you know what, it's a lifestyle choice, which is very different than a lifestyle choice of I love living in an apartment. Guess what? That doesn't happen.
Right.
I had a great friend, great client way back in the day. He was building a house. He decided with his wife and 3 young kids that, they were going to go ahead and put themselves into an RV, go hang out for 6 months while their home that was getting built got finished. Then they ended up on the road for 2 or 3 years, and it just kept getting extended longer and longer and longer because they absolutely loved it. Right up until the wife says, if you don't get me in that home that we built and bought and have paid for, I'm going to be living there and you have the option of wherever you want to go.
It is so different. And at that event in Branson, people are so passionate about the space. It's so different than other asset classes. It really is. It's hard to describe. I believe it.
Well, this is, like I was saying, it's important to learn before you buy, learn how to swim before you jump, that whole saying right there. And so if you are interested, definitely go with the pros. And I got to tell you, I don't know another RV group that is closing as many deals as y'all have. So
yeah, I appreciate it. Thank you.
With the speed of it in the current market, man, congratulations. That's all I got to say about that.
Thank you. It's super exciting. And it really is. It's having the right people on the bus. It's having the right team. And we really do. And everybody's doing a great job. And it's been super exciting. Yeah. Thank you.
Well, absolutely love it. I don't care if you're doing deals, looking to become passive, looking to become a joint venturing partner opportunities in there. If this is an asset class that you're interested in, and I got to tell you, there's just not that many groups that are really focused on it, which is part of the reason why there's still so many opportunities there.
Sure.
Definitely connect with our good friend, Pat O'Brien, the leprechaun showing the gold at the end of the rainbow. And you can find them over at rvresortinvestment.com. So just, you know what?
Wonderful.
I'm impressed. I love what you're doing there. So
accolades
all over.
Thank you so much for the opportunity, and thank you for your time. Really appreciate it. Thank you.
Anytime. Thank you, everybody, for, if you made it this far, thank you double. Having a good time and talking about, hey, how do you find more investors, different asset classes, different ways to do things, and how to stay out of trouble. So thank you all. Talk soon.
All righty. Thanks.